San Diego housing market is shifting almost daily, and the number one culprit is the interest rates. But in this video, we're going to go over why the interest rates are good and why the interest rates are bad and how you can leverage them to actually score one of the best deals in town. Hey guys, my name is Alex Villare, and I'm a real estate agent here in San Diego County area. And I urge you to reach out to me if you are looking to move here to San Diego County area, or you're looking to sell your home here in San Diego, because these interest rate fluctuations are not to be taken lightly. And so you need to reach out to someone that you know, like, and trust, or a professional that can help you understand how to utilize these times of uncertainty to secure a deal for the long-term growth. Now, in this video, I'm not going to talk about just the basics that, interest rates make prices go up and everyone stops buying. I'm going to talk about 3 major pros and 3 major cons that you need to know in order to take advantage of this market. Now, when I say take advantage, I don't want to just kind of push people to buy. That's not what I'm about. What I am about, though, is uncovering opportunity, because I think that no matter the market, there's always an opportunity, whether you're looking to buy, sell, or invest. It's just how you look at it and how to actually uncover that opportunity. Now, the first pro is it curbs buyer demand. What that means is that with the uptick in interest rates, a lot of buyers got scared. And frankly speaking, there was a lot of people out there that were just simply buying outside their means. And as soon as these interest rates ticked up and they could not afford that monthly mortgage, or they thought the housing crash was right around the corner, they stopped buying. However, the clients that we're working with now that are actually out currently buying homes, yes, the interest rates are fluctuating pretty much daily, it seems like, but they are actually scoring deals $50,000 to $100,000 less than they would have 2 months ago. Now, think about that for a minute. You're actually scoring less. So long term, if you look and buy the home that you wanted for $50,000 to $100,000 less, now when the rates go back down, eventually they will, what rises must fall, simply just refinance and they're back at the payment they would have been, but they got the house of their dreams for less money, and they've also accrued equity over time. So the second reason why these interest rates are actually really, really good and why you can leverage them are it allows for more inventory to come on the market. So it kind of piggybacks off of the curbed buyer demand. But essentially what is happening is all these sellers were like, oh no, are we missing the market? Is this the top of the market? Now, sellers, this is actually a really crucial point. So if you are actually thinking about selling your home, do get your home on the market and get it on the market soon. We're going into a seasonal shift in addition to the shifting market and uncertainty. So what's going to happen is if you want to go and buy another home, now is going to be the best time to do so. But if you need to sell your current place, I would look at options like renting it out, debt servicing that, and then going and utilizing your equity that you gained over the last couple of years, and take that equity and go and purchase the home that you want and start building your property portfolio. And if you don't want to become a property manager, then reach out to me, because I have a solution for you that you'll be able to basically seamlessly transition, keep that property until you want to sell it. Or if you want to sell it now, we can help you do that as well. However, I would urge you to keep that property and let the equity keep building for you for the long term. Obviously, we know that the increase in interest rates makes the payments go up, and I'll get to that here in a second. But the third pro I want to cover with these interest rate hikes and how you can leverage them is this gives you one of the best negotiating tools around. So with the uncertainty and all these sellers coming on the market thinking they've missed the boat, now the buyers are actually having a really solid opportunity to negotiate things in their contract. For example, prior to all these interest rate hikes, what we were seeing is buyers basically had to bend over and get the house as is, versus now what we're seeing is people are actually able to negotiate, for example, a new furnace or roof repair or termite work, or lowering the price or helping with closing costs. The sellers are willing to do a lot more right now because they know they're not in the position they were in the past. Now, one quick thing I want to debunk a little bit, and everyone's talking about this on the news, is that we're seeing price decreases. Yes, people are putting their homes on the market and the prices are decreasing, but what that means is the sellers can't reach for the moon and actually grab it. They can still shoot for it, but they're not going to actually get it in this market because of the times of uncertainty. And what we're doing is we're not actually crashing. What I believe we're doing is we are normalizing. And normalization is by far the best, most sustainable way for a real estate market to continue, but you need to get into the market to take advantage of that. Now, some of the cons in this market, which probably you can read about anywhere else, but I'm going to deliver the top 3 I think that you need to know in order to leverage those pros. And the first one is knowing that you might have a higher interest rate initially. So why is that a con? The con is that you're going to have to figure out how to buy the home and still comfortably afford the mortgage over the time until you can actually lower that payment. And once you lower the payment, then you go and switch that over to a pro. But the only way to actually lower that payment is to get into either an adjustable rate mortgage currently. Those tend to be a little bit easier as far as a lower payment, or you can just buy down points and simply just drop your interest rate a point or two. Now, if you're looking to buy an investment property in this market, at this point in time, at the time of this recording, it might not be a good fit for you, and you probably already know why. But with the uptick in interest rates, it's just really hard to pencil a deal and make all the numbers work. However, rents are going up, but they're not going up fast enough to outpace the price increase of these interest rates. Now, if you are an investor, I urge you to reach out to me, because what's going to happen here in the next 6 to 18 months is going to be absolutely crucial for you. So if you're looking to score amazing deals in the next 6 to 18 months in San Diego County, you need to reach out to me. Let's connect, get a game plan, let's strategize. And at the time of this recording, like I said before, right now, it's not the time to buy an investment property, but it might be in the future. So reach out to me if you are looking to. So the third reason why these interest rates are actually hurting you comes from what happened a few months ago. So let me explain. So a couple months ago, prior to the interest rate hikes, what we saw was all these cash investors buying homes. And what they're doing is they're leveraging that 2.5%, 3% interest rates. And what happened is now, statistically speaking, 1 in 4 homes is owned by a company of some sort. And what that means is if you don't get in right now, while the interest rates are where they are, the 5 point whatever percent, as soon as these housing prices go down any bit more, these investors that buy and hold are going to buy a lot of these homes up, and majority of these homes are now going to be stuck as rentals. And what that's going to do is drive home prices up even higher in your area. If you're looking to buy, yes, the payment's going to be higher, but you need to understand the ramifications of not buying currently. All right, so I'm going to wrap up this video here. I hope you got some value from the video. If you're looking to leverage the opportunity that we have in the market, whether you're buy, sell, or you're looking to invest, there are opportunities out there for you, and I'd love to show them to you. I urge you to reach out to me. Contact information is down below. And if you got any value from this video, like, comment, subscribe, and we'll see you on the next one.